we are on the verge of a massive risk asset move if the narratives for the next 24 to 72 hours align correctly. If the America-Iran peace deal pushes through this Friday, that is going to have a massive effect across geopolitical events. Oil has already been falling down for many weeks, and we have been covering this chart for a very long time. Kevin Warsh is speaking in less than 8 hours, and what he has to say about the markets is going to decide whether we are looking dovish and easier for equities, or whether we are looking hawkish and looking for a bit of a tough time in the markets. With SpaceX going extremely overvalued and cryptos probably having a little bit of an opportunity and a room to move up if we have easier conditions, a lot is happening this week. And we aim to break it down and give you the alpha so you can prepare yourself. Hello, everyone, and welcome to Strategic Markets, your place for technical and fundamental analysis all at once. And into our midweek session. And boy, oh boy, is it like a very spicy midweek session that we have over here today. We are starting off with Dawn's deal. And man, this is just amazing. Iran's going to get $300 billion and US is going to end all sanction against the regime. These are the new details that are coming out of the Trump's peace deal to be leaked. And it's absolutely hilarious because they're going to get $300 billion in reparations, sanctions lifted, and assets unfrozen. USA gets the Strait of Hormuz open like it was before, guys. Iran vows not to make a nuclear bomb like they had vowed to before as well. So what's really changed except for a whirlwind of, pardon my French, a shitstorm we've had for the last 3 to 6 months? And the USA gets to say they won the war in Iran. Look, I kind of thought I'd be capable of doing politics in the future in my life, but if this is what I have to deal with, honestly, even I think I would struggle. So anyway, that's something for them to decide. We're just right now observing the markets. And look, what is this doing particularly? Well, Brent Crude over here, if I had just traded this particular chart as a strong technical analyst, this would have been a really good trade to short right over here when you notice such a massive drop in momentum for Brent Crude once it broke below this 105 level and this particular bottom trend line of the red line. From there onwards, it just played out perfectly to come down to the bottom of this particular wedge pattern.
And let's not forget, you actually picked that really well too in relation to that MACD divergence.
Steve, I appreciate that. And yes, 100%. When we were over here, we kept seeing that it went higher highs, but you can see over here, this was just making higher lows. So there was an RSI divergence, and then there was also a MACD divergence consistently that we were talking about on this channel. So if you played along, and look, personally, the reason why I didn't take this trade is because of the amount of geopolitical uncertainty. I couldn't be 100% certain that, Trump would decide to nuke a country and we would just have massive oil prices. But if you did, I'm really happy for you because this is exactly a beautiful technical trade. And reasons why I understand that people actually do trade commodities and precious metals. But what this lines up perfectly well to is that little 8-hour news event that we're going to have where Kevin Warsh speaks. Now, if Kevin Warsh comes on tomorrow, look, there's a 96% chance he does not cut rates or he does not hike rates. This is great because obviously, he's coming into a very hot scenario, which looks to be easing a little bit because look, the matter is Brent Crude has dropped a lot. It's gone down to the pre-war levels. So he's got a little bit of ammunition to say he's not that worried about oil being an inflationary concern in the next 3 to 6 months. Another aspect is the way Kevin Warsh calculates inflation is different to the standard core inflation model we have right now. He looks at trimmed averages like the Dallas Fed's trimmed mean PCE. So he's got a different way of, having a perspective on inflation in the markets. And if he has his way, he might actually speak a little bit dovish tomorrow, which is what a lot of the risk on markets are hoping for. And which is why I personally think Trump had appointed Kevin Warsh. But we have to kind of just wait it out and see. I'm actually still on the dovish side. I actually do believe he's going to come in tomorrow. He's going to say, okay, you know what, things are looking good. I have enough ammunition to say that the next 3 to 6 months are gonna get okay. So based on that, if they are, I'm happy to proceed ahead and, give forward guidance, push back on rate hike fears, speak for AI and technological innovation. And what that's going to do is basically going to stabilize the Nasdaq. People might actually go into a little bit more of a buying spree if that's the case. Crypto could reclaim its momentum and attempt to break the 2.3 trillion barrier, and risk assets will basically benefit from this certainty. But if he does what most other Fed chairs have done after coming in to power and into a very hot scene like this is where we are right now, then we have some problems, guys. And we should be prepared for that too, which is why I'm not trading right now. I have to be honest, this situation is really hot. And when you have this much uncertainty, even if you're certain and if you want to, consider the corrupt powers that may be and have your own conspiracy theories, the truth is we can never know for sure. I never thought, America would go through war with Iran, but that happened. So in that case, if he is coming out as, hawkish tomorrow, then bond yields could rise, which means that liquidity expectations for, get pushed further out because, no one's going to want to spend if we are having a hawkish stand and rates go up. Crypto is definitely going to struggle. It might not even move up. It might actually even go down. And Nasdaq extends to more of a profit-taking cycle and a bit more of a sell-off. So keep that in mind that at the end of the day, it's not a lot about the rates changing tomorrow, but basically what Kevin Warsh has to say about the future outlook he has. And talking about future outlooks, something extremely volatile is this particular chart. Now, I wish this was an altcoin, or I wish this was a new microcap company, but this is SpaceX chart. Like, to think that SpaceX over the span of 3 days has already moved a 50% move on stocks that are only 5% of SpaceX shares are currently trading in the market. This to me is actually really concerning. Like, I don't know who buys shares without doing some reasonable amount of analysis. But if these are the investors they are truly in America, then I really wish them the best of luck because it's concerning. And look, the reason why I say that, I don't want to just harp on someone else's investment strategy, but the truth of the matter is there's going to be unlocks of shares that are going to be happening. The first one is going to happen in about Q2 2026 on its earnings call, anticipated between July and September. And up to 20% of the restricted shares can be sold immediately following that. Then an additional 10% can unlock if the stock trades 30% above the IPO price. We are nearly above 50%. Okay, in the last 2 days, we're not above that much right now, but we're definitely above 30. In that case, this would be a massive unlock, guys. And after that, there's more staggered unlocks there, 70, 90, 105 days. So I expect a bit of a sell-off. So anyone who's buying in at anywhere around 200, like, I really wish them the best of luck because that's a really scary asset to be involved in, especially for the next, I'd say, short-term to medium-term strategy. But you know what? At the end of the day, I do dwindle in one of the riskiest assets there is, cryptocurrencies. So who am I to say who's an investor in SpaceX and whatnot? And where we are right now for Bitcoin is a very beautiful situation. Look, we have come out of this bottom pattern over here and we have broken above these particular resistance zone, likely converting them to support. Now, with regards to the amount of volatility we have from Kevin Warsh speaking, we could definitely touch the 63, 64K level against the 63.8 before deciding the direction of the market. Right now, we're stuck on the 20-day SMA. We do have a MACD bullish crossover on the MACD, so that's pretty good. And you can see over here, we broke back into this particular, from oversold back into the RSI purple box, that the market started rallying again a little bit to the upwards. So some technical indicators do show good, especially on the daily. And another interesting fundamental news for Bitcoin is that BlackRock, which is the largest asset manager in America, has basically launched a Bitcoin ETF that pays you a monthly income. It legitimately pays you a monthly dividend. Does that sound familiar to you guys at all? What other company just very recently started doing that? That's right, it's Strategy, formerly known as MicroStrategy. They started a new yield ETP that gives people about 11.5% annual yield. But here is the interesting thing though. BlackRock's ETF is actually rumored to be giving yield anywhere from around 15% to 25%. It makes you wonder, what does BlackRock know about this asset and its expectations of performance, and as to why they might choose to give you a 15% yield when they might be wanting to bank on higher yields of the asset itself. If Bitcoin does a 30% run from here or 50% run from here, which it has done in the past, and BlackRock's only needing to give 15 to 25, they're going to be banking in a lot of money, and they already hold a lot of Bitcoin as well. So these are the kind of indicators that you really want to be thinking. If JP Morgan has recently released a ETF for Bitcoin, if BlackRock has now done the same, and not only do they already have an ETF, but they're launching a special ETF. Am I going to be investing in SpaceX right now or crypto? I'll leave that for you to think on, but I can't give financial advice on that. But what I can tell you is right now, from a liquidity perspective on Bitcoin, you can see that we do have some liquidity to grab at the 60K zone. And look, I'm not saying that we're not open to getting that. This could be, the market makers liquidity where they know that where the direction's going and they decide to pump it up. They're having their leverage longs here, or we could come down, take this particular liquidity before, choosing the direction. I personally still see that we have a lot more liquidity to the upside at about 8.6 billion at the 74K level as compared to, just 4 billion at the 56K level. I don't think they go down to 56K. I think there's a lot more support at 60K or so. But yeah, from the way it's looking, it's skewed a little bit to the upside. But I also was saying that 3 weeks ago and we had a massive downside event. So really, this one, I'm just taking it as a little bit of a directional indicator. It really plays out based on how and what the market makers want and basically where it benefits them particularly. On that though, our second best asset for crypto is Ethereum. And Ethereum is on, if I expand it out, Ethereum is on this wedge pattern itself. We've talked about this wedge pattern quite consistently. And it's funny how it's just on the verge of this particular wedge pattern support line, which is currently acting as resistance. Now, I personally think the crypto market is waiting for Kevin Warsh to speak. And if we have a hawkish stand, then we are looking for a price action downwards. So that's going to be concerning. But if we have a bullish stance, then in that case, that would likely push us above and back into this zone. And after that, whether we take in the 2100 level or so, that's just up for us to see. But I personally think that's the decision point in the market. And another thing you need to know about Ethereum is right now on the monthly, we are the most oversold on Ethereum that we have ever been throughout life on the monthly chart aspect of Ethereum. So that is really an interesting thing for you to see when Ethereum is going to have one of its most massive or highly anticipated upgrades known as Glamsterdam. I didn't name this upgrade, although it sounds pretty fancy. But it's going to have significant scale layer L1 performance and reduced transaction fees, which basically means it's going to have higher throughput, it's going to be faster, and it's going to be cheaper for its people. So Ethereum is starting to listen to its community and not just making it based on what they want, but basically dropping the costs and addressing concerns that the community had for Ethereum. So this is expected to happen in the second half of 2026. A lot of people pushing for Q3 of 2026. So if Ethereum is at its lowest on the RSI on a monthly perspective, and we have its biggest or highly anticipated upgrade just coming in a couple of months' time, can you imagine how quickly the narrative can shift if we have Kevin Warsh and a peace deal aligned as well with that? Very interesting. And if Ethereum moves, what else moves? Altcoins. Altcoins has been on this 4.5-year downtrend. And I've told you this before, but we are right now on a bit of a breakout event for altcoins, particularly right over here. This could play out very well. And if we take out the 20-month SMA, then from there onwards, we have some really clear skies. So there's a lot of correlation. Even in the past, we talked about copper versus gold and how that's correlated to strong bull markets. And that one has been doing really well as well recently. If that one takes out the 20-week SMA, which we're just about to touch off, then I personally believe this is where strength and risk assets start off. So we haven't broken through that yet. It's just a bit of a look at. But coming back to the point, all I can say is the next couple of days are extremely fruitful and valuable. And depending on how Kevin Warsh and the war goes, this could be the biggest risk on move. And if you're not positioned right now, I don't really say this lightly, but if you're not positioned right now and you haven't considered what your risk to reward ratio is, then you could be missing on something big. So hopefully I made a case for you today for you to reassess or assess how you go. But on that, none of this is financial advice on always do your own research. But I'll pass it over to Stephen over here for his thoughts and analysis.
Well, thank you very much for that, Yash. And in relation to the chart analysis this week, let's start with Bitcoin, since you actually just were leading off with that as we finished up your presentation. In relation to the short-term trending as we're going, to tell you the truth, I'm actually going to be a little bit neutral in relation to the way Bitcoin's trend is going at this point in time. The reason why I'm actually saying that is because we're actually currently testing these short-term moving averages at this point in time, as well as these resistance areas from October and November of 2021, as you can see in this chart here. This could only just be a short-term thing though, but do definitely observe this at this point in time. Why? Well, we've got a couple of red candles here over the last couple of days, and we are just beneath the 15-day moving average at this point. So this could be some short-term weakness at this moment. As well, you can also see with the lagging indicator with the Ichimoku curve on the left-hand side that we actually are testing these resistance areas here as well. So overall, not as bullish as what Yash has been saying in terms of Bitcoin for the moment. We are also beneath the baseline area here. So it's not showing 100% positivity right now. And on top of that as well, the baseline is, or sorry, not the baseline, the Tenkan and Sen being the trend line is still going with lower highs and lower lows. So Bitcoin's not really being 100% in terms of being cooperative with a total uptrend right now. However, we are still actually showing some bounces in terms of these particular support areas here off the March 2021 and the April 2020. So we are seeing some mixed signals in the overall scheme of things. We're forming and hammering out a base more than anything else, but we still need some more direction than anything else in terms of actually pushing upwards and getting up above these other areas to be able to really say with definitive aspects that we are actually moving 100% upwards. Something's happening, but it's not really giving us full confirmation as yet. In terms of Ethereum, similar kind of situation. We're still really testing this area here from April 2025 and still beneath that resistance area at this point as well. Wait for the confirmation to really say definitively that things are actually really in the upward direction. You can really see that from the lagging indicator. Even though we are actually forming higher highs and higher lows at this point in time with the lagging indicator, we still haven't cleared this baseline area here to really say with definitive action that we are actually moving in that upward direction. Things are looking more positive, but not really that confirmation as yet. But getting there, getting towards some movement in the upward direction. Overall, things are starting to look a little bit better. In relation to the indices overall, things looking reasonably well. We're above short-term moving averages in terms of the SPY. We've had this positive movement here, especially on Monday. Everything's shooting right upwards. Everyone's saying, yep, peace deals coming through. Things are looking really, really good. Haven't formed the all-time highs on the SPY though. That is one thing to really, really keep an eye on. And then we've had this retracement here in terms of Tuesday, even though everyone's still very, very positive and everyone's looking fantastic overall. But for the SPY and the Qs, things have actually still been retracing backwards, even though you've got things like SpaceX looking really, really fantastic and everything's all going great. But even as Yash was mentioning before as well, taking a look at SpaceX, there was that big wick, okay? And we can see that here on this particular chart. There is that big wick in terms of the fact that it went all the way up very, very high in terms of up to as high as $225 on the charts, and then came all the way back close at $201 at the end of trade yesterday. So be mindful of that. There's a lot of excitement. Everything's going all the way up, 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 up. And even in pre-trade, I think it went as high as $230, but it couldn't sustain itself. So it actually came all the way back down again. These are the kind of excitement that does happen at certain times. Everyone's extremely bullish, and then all of a sudden people say, well, hang on, maybe it's getting a little bit too extended, and then comes all the way back down. So these kind of things do happen. In terms of things, it doesn't seem as though the SPY and the Qs are really holding on to all of these gains as well as everyone had hoped. In relation to things as well, we're getting certain segments of the market that are doing a little bit better than others. And like we've been saying even on the weekend, the Dow is seeming to be outperforming compared to, say, the SPY and the Qs. And we're seeing that here in this chart in particular. Overall, in terms of the daily chart, the Dow is outperforming compared to the SPY and the Qs. But are we now getting overextended even in the Dow? Potentially. So really keep an eye on that. Now, in terms of the Dow, maybe we may actually be opening just slightly lower compared to where we finished today yesterday. In terms of the Russell, how are we looking over there? Well, the Russell did not have a good day yesterday, so we actually finished up there just about, almost about 1% lower. Will this carry through in terms of today's trade coming up shortly? Well, overall, looks as though we're actually going to be opening just slightly higher in terms of the Russell, in terms of trade about to open up in around about half an hour's time. So overall, doesn't seem like there's going to be a massive amount of weakness coming through in the markets up shortly. But like Yash has said, we've got Kevin Warsh coming up in terms of talking a little bit later on today. So that can make things change very, very quickly in the dynamics of the markets as well. So really, really observe what happens there. And you have to also remember as well, Kevin Warsh will be talking about things in terms of bonds, bond yields, all of those aspects. And this can really, really affect the Russell in particular because they're the small caps. Speaking of bonds and bond yields, how are things looking there? Well, overall, we've recovered above the September lows. That's a good thing in terms of the bonds and also in terms of the markets overall. Recovering past the September lows, after that, we're basically looking to see whether or not we can get past the prior support, which is now acting as resistance from January. We get past this area up here, that's really strong for the bonds, which would really be keeping the yields or the interest rates quite low. And as you can see at this point in time, in terms of the yields have actually come down well below at this point in time the short-term moving averages. So that's actually quite a good thing. And in terms of the yields as well, in terms of the interest rates in particular of the 10-year, we're actually now currently testing the 50-day moving average at this point in time as well. Should those yields get below the 50-day moving average, that's actually quite good in terms of things for interest rates, in terms of potentially bringing the interest rates down. So if there's good news, I suppose, from the perspective of Kevin Warsh in terms of potentially the yields coming down even further, then that could actually put less pressure in terms of interest rates as well. And that could actually be quite good in terms of even things for the stock market as well too. So another thing to observe as well. Okay, so that's now covered everything in terms of, say, the stock market, the bonds, all of those aspects there. How about the dollar? Well, the dollar itself had actually been strengthening quite a lot over the last week or so. It seems to be easing a little bit more, but it's still actually being quite stubborn and staying above that support level from back over in December of 2025. So observe this and see whether or not we're actually going to be staying above these short-term moving averages for much longer. If we do, and if we stay above the support area here as well, that will generally tend to suggest that the stock market itself could actually still be having a few jitters. And overall, there might still be a little bit of concern as to the overall stability of the markets as well too. Another area we like to keep an eye on as well here over here at Strategic Markets is also looking at gold and silver. Now, we're actually talking about this as well in our special edition as well in terms of the metals. So take a look at that if you haven't had a chance to look at that. I'll put a card up at the top of it as well there so you can actually have a quick squiz at that too. But in relation to that, we're actually now currently testing the long-term support resistance line from back in October as well. Smack bang on that right now. And those actually align quite well with the short-term support areas or the short-term moving averages, I should say. So really a matter of basically seeing whether or not we can get it back above those areas or if we actually fall beneath those areas again and come back down to these lows here. So we're still in a little bit of no man's land right now as to whether or not we'll actually get above these areas or fall below. And the same kind of thing can actually be said for silver as well at this point. It's really smack bang in the middle of those short-term moving averages at this point, but we are above the 200-day moving average when it comes to silver. Not so at this point in time for gold. Silver is actually showing a bit more relative strength at this point compared to gold. So that pretty much covers everything that we normally look at here at Strategic Markets. So I'll hand it back over to you, mate, and we'll see everyone on the weekend.
Well, thank you so much for that, Steve. Really appreciate your technical analysis there. This is where we're at. What Kevin Warsh says, and this video will likely come after it, so you've got a bit of preparation for everything. But what he has to say, how the peace deal goes, really sways the market. And the way I see things needing to get done, because Trump does have his midterms coming in October, he needs to make people some money so that they can vote him in power. People who love being in power want to keep their power, and that is what I believe his play is in this particular scenario. So, conspiracy theories aside, I really wish you all and us the best. If you have tuned in up till now, thank you so much for today's word. Let's go, dovish Warsh. Dovish Warsh. Put that in the comment section. That would be great. That lets me know who is staying along till now. Thank you, Mark, for your ongoing support, and anyone else who puts that comment in, you'll get a shout out on next week's video. If you have liked what we have shared with you today, please drop us a like. That goes a long way into our motivation to keep making these. If there's anything we could do differently or something you enjoyed, please drop us a comment, or even anything you want us to cover in our next video. And on that, if you're enjoying the journey and you want to come along with us, please subscribe, because that will keep you updated as to what we do next. But on that, thank you so much, and we will see you on the next one.
See you on the weekend, everyone.